Steel. We've got Nigel and, of course, a whole host of experts on our panel to quickly dissect the numbers for us. Nigel, first glance, that loss seemed to be a shocker, but a lot of one-offs. And I think at the operational level, a huge beat coming in.
It's a good beat, actually, that's come in, Surabhi. Let's take it step by step. First, the India EBITDA per ton at around 8,050. Remember, for majority of the quarter, there was no MIP. So if you assume 1,000 rupees, 1,500 rupees coming in, that's the price hike that's come in, that could directly percolate onto the EBITDA per ton. So quarter one FY17 will look fantastic in terms of standalone EBITDA per ton. Moving to the European operations then, on an EBITDA per ton basis, the last quarter we got a negative $31 per ton. Now those losses have been stemmed down to around $15, a negative $15 per ton. That as well is a bit of a positive. Remember, nearly around 40% of these operations have already been sold out
off, yeah.
because the Scunthorpe operations are going to be out of the way going ahead. Southeast Asia as well, very small unit. They only sell around half a million tons or around 0.6 million tons. Oh, there as well, they've come in with a positive EBITDA number. So that as well is fairly good. It's a positive EBITDA of around 65 crores. That compares with around 52 crores that they did in the last quarter. So on a sequential basis as well, there's a bit of a positive. In terms of something that, you know, the street won't be happy about is that a lot of people went into this event thinking that we're going to get clarity on the sale. There's going to be some kind of roadmap that's going to be laid out. That didn't come about. So that's something that the street will not like. And also they were waiting for some kind of clarity in terms of whether there is going to be some debt that is going to go with this asset and the likes. That as well didn't come about. But the exceptional loss, just keep that aside. A lot of one-offs involved over there. Yeah. Operationally, the numbers are quite good.
So, Parag, come in on this. How will the street interpret this tomorrow? The disappointment that there's no clarity on the UK stake sale as yet. Will that be more important, or the fact that there is an operational beat, and particularly the India operations have done really well this time?
Yeah, absolutely. And as Nigel said, that MIP impact is still not yet fully factored in. So next quarter will look very good, and so market will take cues from that. I think it should remain on a positive note. But from a longer term perspective, my only worry is that current EV of the company is around 1,05,000 crores, and if suppose they make even 10,000-11,000 rupees per ton in domestic business, and they produce around 16 million tons. So then 17,000 crore EBITDA from domestic side can come.
So what about the stock? I'm sorry, we're running a little short on time. Massive rally from those levels of around 245, 250 odd. Is the best is already in the price, or do these numbers give fresh impetus?
So I would say that in near term it can do well because on the expectation of this UK asset sale and plus this India domestic EBITDA performance. But I would be very cautious from medium to long term perspective, definitely.
All right, then let's get in another view. I think we have Chintan Mehta who joins us currently. Hi, Chintan. You've had a good look at the numbers. Domestic performance, the best is yet to come. European losses as well have been cut. But how disappointed are you that we're not getting clarity on that asset sale? Where do you expect the stock go from here? As Parag was saying, maybe it's trading at around 8 to around 10 times EV per EBITDA.
Yeah, absolutely. I mean, you said it very right. Then operationally it's a bit, when the company has done well in terms of volumes. What it seems is that for the month of March, they have pushed in more volumes rather than focus on pricing, because on quarter-on-quarter basis, the realizations looks absolutely flat, or rather a minor dip. In fact, I can say that. So much of the thing has came because of better operation mix and captive iron ore, coal, less raw material cost on domestic front. On the Europe front, to my surprise, we were expecting around more than $28 loss per ton, still which they reported only $15. So even that is favorable. Southeast Asia operation. So on operation basis, it's a quite good number. As again said that what thing worry besides debt and enterprise value is that we are still uncertain about how much impairment companies yet to provide. We're seeing the quarters by, we're seeing kind of impairment companies providing it. So we need to will be a bit of a concall means what exactly kind of impairment they're looking in the mind, because that substantially reduces my book value, and we need to have a one-time effect as an analysis. We need to take down those assets on a permanent basis and how the valuation looks like.
All right, Chintan, I'm going to come back to you just to ask you how the stock is going to move tomorrow. But Gaurang, your take, how does the stock react tomorrow? Yes, there have been some improvements, no clarity. Where does the stock go tomorrow?
Well, Nigel, first a disclosure from our side. We have a reduced recommendation on Tata Steel, and on fallback of these numbers, my sense is that we could possibly see some move on the higher side and then a cool off, given the fact that they have more than 74,000 crore worth of debt on the balance sheet. And of course, the process is still work in progress for the operations in the UK. And there is a lingering overhang in terms of the pension payout. So I think all this put together, uncertainty still remains.
Okay, all right, gentlemen, we'll have to wrap it up on that note on this edition of Markets Forward. Parag, thanks so much for dropping in. And of course, Nigel, thank you for all the analysis. That's where we take your leave, but do stay tuned. We have India Business Hour coming up next.